This NGX stock turned over 100,000 naira into 2.6 million naira. But there's a trap that a lot of retail investors miss when they look at this stock. I'll tell you. NCR Nigeria. If you have been following the Nigerian exchange, you already know the stock I'm talking about. 1,354% in 2024-2025. Another 176% in 2026. Early 2026. Basically one of the most dramatic runs on the NGX history. But this is what nobody's talking about. NCR has a free float of 31.74%. That means out of 108 million shares, only about 34 million are in circulation. Only 34 million is actually available for investors to trade with. The parent company, NCR Corporation USA, is basically sitting on 61.76% of NCR, and they are not selling. They are not selling. So, what happens when a stock has tiny supply and a wave of buyers rush in? The price explodes, which is exactly what happened with NCR. The price exploded because a lot of people rushed in to buy. But let's flip that around a little bit. What now happens when the buyers disappear and you need to sell? There's nobody on the other side. Your sell order just sits there. That is called a liquidity trap. And right now, NCR is one. Now, to be fair, the fundamentals are improving. For the full year of 2025, NCR flipped from a loss of 2.17 billion naira to a profit of 196 million naira. Their revenue jumped from 2.15 billion naira way up to 3.08 billion naira. Even their earnings per share went from minus 20 naira 11 kobo up to 1 naira 82 kobo positive. That turnaround is real. But here's the honest truth. Between 2020 and 2024, this company was losing money every single year. 1 year of profit does not make a fundamental story yet. The market is essentially betting that this recovery holds. That is a bet, not a certainty. At 199 naira per share, NCR is trading roughly at 10.9 times trailing earnings. That sounds reasonable until you remember that those earnings are brand new. The stock ran 2,600% before the profits ever showed up. So which basically means that the price led the fundamentals, not the other way around. What we have here is a momentum-driven stock that has gone flat for over 3 months, sitting at elevated valuations with thin liquidity and a fundamental story that still needs to prove itself. Now, don't get me wrong. This is not me saying that NCR is a bad stock. Of course not. It's not. It's a good stock. The recovery could absolutely continue. And their 2026 first quarter earnings dropping sometime between May and June will be our moment of truth. So basically, we're waiting on that. And we're going to come back to this. Don't worry. Strong numbers could unlock another leg up. So if their numbers are strong, by the time they release their financial statements, the price could move forward. And weak numbers could trigger a sharp correction. So it's an either or situation right here. The lesson here is this. A stock that goes up just because of tight supply can just as easily get stuck because of the same tight supply. Always ask yourself, if I need to sell tomorrow, will I be able to? This is especially important for the NGX, where free float restrictions are common across several listed names. The same dynamic that made early investors of the NCR rich is the same dynamic trapping the late buyers now. Know the difference before you enter. And don't get me wrong, NCR is not a bad stock. It's a solid stock. We just need their earnings to tell us what's going on. And always remember, this is just for educational purposes and not investment advice. Always do your own research. Share this with your investment circle and don't forget to drop your questions below. And as always, follow me, like, share to anyone who fancies content that revolves around the US and the Nigerian stock market. And I'll be seeing you in the next video. Bye-bye.